Good evening. This is Ken Long from Tortoise Capital. I want to do an additional short video on a couple swing trade frames that we have for overreaction and channeling in ILF, Latin America, and EEM, emerging markets. We had some difficulties with the webinar tonight with connection, so I want to get these posted. The first one is ILF. It's had a nice move, longer term had a nice move off the bottom. Moved up to 46, declined through the river, failed out a sideways quiet channel, made a low at 42.9 in the ribbon. There's a little spike down a little further. Looks like a bottoming tail, actually. But if we take the low of the ribbon, it comes in right around 43.9. And then bounced off the oversold and moved up to 45, and then has pulled back now to 43 and a quarter with a weak day on Friday, creating the opportunity for value. And so if we go strictly by the swing trade rules, we could just buy the opening mechanically and then wait for a cross of the 10-period moving average to exit. If we wanted to engineer this opportunity a little better, a little closer, we could wait to see some evidence of the reversion to the mean occurring, in which case we could take either wait for intraday and put a turbo position on for price exceeding the real body of the candle from Friday, or 5 cents over the high of the day at about 44. That's about a 40-cent difference in entry levels. And then for initial stops, we'd be looking at either like a nickel below Friday's low, or a nickel below the swing low of the ribbon, which is about a 20-cent difference. And so if we zoomed in on that, this is essentially what we'd be looking at. This is the entry, a nickel above the real body. This would be a nickel above the high of the day Friday. Initial stop, nickel below the daily low, or a nickel below the swing low of the ribbon. We would discount this long spiky tail, and we'd be looking at a price target of 45. And so depending on how you frame this, you can get 2 to 1 or not, or you can engineer the entry using intraday technique with the 3-minute charts the way we normally trade intraday. But you'd be having the higher time frame giving you some support if you saw some price action moving north. If it held right here at above 43, that would be good, because then you'd have a swing low and then a higher low, and then that would be your lazy W with a lot of room just to get to 45. And if you get success at 45, looking at 46 is the next profit target, next price target here. Okay, so that's a quick look at ILF. If we then looked at EEM, slightly better shape. It had a nice run up here above 45 also, and then has decayed slightly, but this is more of a gentle decay here. One big down day, but we're still inside the floodplain of the river. Be looking at entry somewhere around 43, a stop anywhere around 42.5-ish. Again, that's a nickel below the low or a nickel below the swing low. Looking at a target initially to me about 44.3, and then if it gets through this hump, we'll be seeing a target a little above 45. If we zoom in on that, get a little closer look. This is the price action we're looking at, that pull down here. Again, slightly higher low, holding it outside the floodplain. So we're entering a nickel above the real body or the high of the day. Really, there's not much difference there. So it's functionally an entry around 43, with a stop either at about 42.7 or 42.5. And again, the same as in ILF. If we saw failure here below this swing low, that would be an auto short, because clearly now we'd have failure out of the river and a continuation pattern to the downside that would you'd see some days perhaps like these red candles. So this is a perfect location for a critical state that you can frame a very favorable reward to risk trade in either direction using known support and resistance levels. So this is EEM, and that looks pretty good to me too. So thanks for your kind attention, and we'll see you in the chat room.